Hi guys, in this video we will talk about Fibonacci and how to use it and why it's so important to understand each level and how we can use it to understand from discount to premium price. So I built this slide which is gonna explain to you a little bit from theory and also how to place it, etc. So let's hop in and not lose a lot of time. So who was Fibonacci? The name of the tool comes from Leonardo Fibonacci, who was an Italian mathematician. He was born on 1170, and this guy pretty much what he did was he discovered the sequence of number that appears everywhere in nature, from seashells and plants and galaxies. Now, today's days, Fibonacci is used on plans, on the weather, on the galaxies. It's used to predict, even human behavior and all the things that we're not gonna get really deep into what Fibonacci is used in real life, but it's actually used, on trading, and it's used to predict where price might react or reverse. Helping us to predict precision entries and have when we should get out of the trade, etc. So Fibonacci pretty much will help you to learn about the extension levels, and also it will help you understand the potential reversal zones. We got levels like 38, 50, 61, 100, and the extension level all the way to 161. And this is used to help us to discover the structure. If the market starts sending to one direction really strong, we get to put that Fibonacci and we get to predict where the market probably will stop, and or when probably the market will reach, you know and this is already an example here, how Fibonacci is placed. We use Fibonacci, only when there's volume, when the volume is about to come. And you guys learned in past video, when volume comes, when it's the volatility, when the overlap of this of the sessions. And you usually want to look at those movements to start placing your Fibonacci's. you know and here it says, when there's a bullish market, you draw, the Fibonacci from the swing low to the swing high, from the swing low to the swing high, and then you'll be able to get your levels. In the bearish market, you do the same, from the higher to the lower. And when price pull back to one of those levels that I'm explaining to you guys, that's exactly when, not exactly, but that's usually when you get into the trade. There's good entries because you get to put your stop loss in a level that if the market goes down, it usually is gonna keep going down. It's not, you're just not gambling that much, if that makes sense. So like I was saying, if the market is in an uptrend and you start with an engulfing candle pushing the market up, we get to close that Fibonacci down into a potential history level on the left, or a potential psychology level that we think the market is gonna go. We place the trade all the way up there, and we look at this level that I'll explain to you now for a possibility of a retracement. Or if you haven't get in the trade yet, you look for that retracement, and then you get into the trade. So many traders place buy and sell order at these same levels. So some traders use, if you already on the trade and the market start retracing on you, some people even place another contract or another trade. They get into two trades in this at the same time. They line up previous high lows or trend lines. The market usually create trend lines and high highs and high lows, etc. And you'll be able to, you know, predict the Fibonacci is getting respected. You know, this is at the level that Fibonacci respect a lot. So I'm gonna hop in the chart and explain to you guys later. You know, more precise. Sometimes Fibonacci does not work. This is not like a everyday thing, or I would say it's an everyday thing. You can use it, but not usually. You're gonna be placing trades at 50% all the time. In this case, you can see the market is just buried. She has not no retracements for you to to re-enter the trade or place another contract here, etc. So if you can see something here and then a couple green candles coming into here, a lot of traders place a trade over here with this stop loss, over here, and then market keep going down, and there's a good entry right here. But trading like this, it's hard because there's gonna be a retracement, and you don't know when that retracement is gonna do. So if you place a Fibonacci and you already break all these levels that they're supposed to do retracement, and he hasn't, it means that your Fibonacci is not getting respected, so it has failed already. So you gotta pretty much just invalidate that Fibonacci. The you combine your Fibonacci with all the more things. There's a trend line you can see here, previous high and lows, and season opens, or overlap sessions, when there's a lot of volatility, when you have to have a lot of confluences to understand that your Fibonacci is making sense. This is a little bit of um how you guys should get into the trade. So this is made by AI, guys. So this is not actually a real chart. I'm gonna hop now into a real chart to explain to you guys. And actually today it happened, so it's awesome because I can explain today. I can explain to you guys in real time how Fibonacci get to be placed and how to use it. So let's hop here in the chat. You guys can see here that we got the market open today. This is the candle the market open, and it took out swap liquidity, grabbed swap liquidity under this level here, and we see this candle push up really strong. So I put my Fibonacci thinking the market was gonna go up to this level, this strong level over here, thinking the market was gonna go up to this level. So we can see here that we got a fair value gap here, right? So first of all, so I sent a sell tonight here, thinking the market was gonna come back down to retest this level here, right? I made that trade first. My Fibonacci was here, around here, right? When this push over here, and market went all the way over here and it filled up the gap. I thought the market was gonna go back here to zero point 0.5 Fibonacci, retest these levels around here to then can push it back. So I sent that sell, and we got stop out. So then after I see the market start pushing up, start creating a structure. So I go, okay, maybe the market is gonna go to this level over here, right? You guys can see here after the market break the zero point 0.5 Fibonacci, right? And it hit like 0 0.7, the market come back down and retest the zero point 0.5 level. That's where we enter. You enter over here and you put your stop loss, you know, your 5 points, your 6 points down here. You guys can see here, retracement level. This is when you enter a trade, right? So let's see, we enter the trade over here. So, this is 3 point Fibonacci, right? We're 5 points. Let's see, go around here. This is just an estimate. So let's hope here. TP1, 61. Got 68. I gotta change that, guys, over there. Also, I also want to explain something to you. I got two types of Fibonacci settings. I really like the one that TopStep has as a default settings. So I'll be trying to teach everybody with that one. The 68 to 61 is not, it's not much difference, over here. So it's not much difference. So it's telling you that your first TP, if you enter 07, your first TP is gonna be 68. You know, she's gonna be around your 10 points. So you say second TP is gonna be 100. 100 is gonna be all the way up here. You know, we don't trade every 15 points, right? We trade every 5 to 10 points probably for every TP. So this is just a huge Fibonacci, obviously, but it is respected. That's how I want you guys to understand. It is respected very well, and usually, I'm not expecting that our trade to be going this beautiful like it is right now every single time. Usually, if you aim for 40 to 50 points, the market comes and stay here a couple hours, and probably next session come and hit the TP. But Fibonacci was respected. Fibonacci has been respected since 8 p.m. And like I said, this is one of my favorite tools to understand what's happening, why the market is doing this, why the market retraced to this level. So as right now, I got a huge level here that I gotta be looking for at any time. And that's it, guy, for Fibonacci. I hope you guys understand Fibonacci. We're gonna go really deep, more video into Fibonacci. Is gonna be like 30-40 minutes into phase number two. It's gonna be live me using Fibonacci before I trade. It's gonna be videos how I use the Fibonacci to understand the key levels of the day. I'll understand what's gonna be the key level of that trading sessions, the key level of the day, the micro key level of the daily buyers as well. So you can see, guys, here that we might be pushing to zero point 0.6 extension level on New Year's session, and we probably gonna take off this level here, and we probably find a whole new bullish trend for these market. So guys, this is it pretty much for Fibonacci. Hope you guys kind of understand a little bit how to use it. It doesn't have to be perfect, guys. You don't have to put the Fibonacci like you know everything perfect. But even if you put it like all the way over here, you can see zero point 0.5. You got retested. This is a week. You would have got stop out here if you would have entered here. Put a stop loss. 5 points over here. This would take you out. But this is if you would have put your Fibonacci all the way over here. But if you would have put it here, you would have sniped the market. So sometimes you just gotta be lucky. Like I tell everybody, trading sometimes is lucky. So you can see, like, even here the market respect the level, the market also respect the levels in there. So this is a good understanding for you to know how to use Fibonacci's. And this tool can be found here. You can see Fibonacci retracement. You hit it here. I'm gonna place one here so you guys understand. So you just grab one corner and bring it down. You can see the zero over here. So I bring it over here, zero, all the way to when the market finish over here. This is London opening right now. That's why it's going a little crazy. Um, you guys can see here, zero point 0.5 Fibonacci. The market literally respect that level. You can see one, almost two, three candles. Respecting that level. So this is a good understanding. If you go to like 1 hour, it'd probably be more easy to read. Watch. You see how the in 1 hour is pretty easy to read the Fibonacci, how it stop at zero point 0.5. With what you do there, if the market retrace to this level, so you boom, you place your sell there because the market retrace on the Fibonacci, and you aiming for what? For the market to swap liquidity one of those levels over here, right? You put your Fibonacci into here, market retrace to zero point 0.5, you enter the trade, put your stop loss a little bit over the zero point 0.5, and aim for any other level down here, close to your point one. Obviously, here is like, well, like 20, 30 points, that you can get in this level. So this is our overall, guys, for you guys to understand Fibonacci, how to place them, how to understand the levels, and yes, guys, use these two as much as you can, and it will help you a lot to familiarize yourself with the market.